Good afternoon. Thanks for joining us on our webinar today. We're going to go ahead and get started in just a few moments.
Good afternoon, everyone. Welcome to the webinar series with Cornerstone Wealth, where our advisors provide insight on financial planning topics that impact our current and future clients. My name is Charles Robinson. I'm a financial advisor, a wealth advisor here at Cornerstone with a master's in financial planning. I'm joined as well with my colleague, Matthew Sandberg, who's a certified financial planner here at Cornerstone as well. Matt, what's going on? How are you?
Hey, Charlie. Great to be here. Thanks.
Awesome. And today's topic is going to be risk management, disability for working or young professionals. And before we jump into the topic today, I just wanted to take a second and discuss Cornerstone's comprehensive wealth management process and really how we get to the point of having a detailed conversation around risk management, or specifically disability insurance. As a firm, we tend to follow the CFP board's guidelines for financial planning, which really encompasses 6 key areas. And those are cash management, risk management, tax planning, investment management, retirement planning, and estate planning. We believe an integral part of helping our clients, understand and solve their financial dreams and goals and understand how to get there is to truly understand what it is that they're trying to achieve. And through that process of comprehensive planning, we feel like we can get the best idea and really form that foundation or blueprint to help them achieve their dreams and desires. As we kind of switch gears and get into what we're going to talk about today, which is risk management, we hear that topic or that term or phrase so often, whether it's in business or financial planning or anywhere in the world. How do we manage the risk, and why is it so important? And really what that means is it's just a process of projecting and evaluating how different situations or risk will impact our current clients or future clients' goals and objectives. And so as we kind of move forward through this process, we're going to talk about how we as a firm look at life insurance, health insurance, disability, and property and casualty insurance, and plays a different role in our clients' lives, and see how we can evaluate gaps, or in some cases, see how much, if any, excess that you have if you have too much coverage. At the end of the day, what's most important is we want to make sure that our clients are well positioned for what we know to be the certainty of uncertainty. And as we get prepared, why don't we go ahead and jump in, Matt, and why don't you take the reins and let us know what this is all about and what we're going to get into today.
Absolutely. Thanks, Charlie. And so, just to kind of start off, why is risk management important, and specifically going a step further, why is disability insurance important? And, if someone was to ask you, what you think your number one asset is, a lot of people would probably think about it and say, it's probably my home, or it's probably a piece of property, that I own. And not to be a trick question by any means, but, really your number one asset that we all have is you and your ability to earn income. And, with the ability to earn income, when you think about becoming disabled as a result of, an injury or sickness, being unable to work, whether that's part-time or even full-time, can have a pretty significant impact on your future income. And that's why disability insurance and, more, specifically risk management can be a great resource in terms of providing that income benefit to you, in the unfortunate event that you do become disabled. When you think about the average disability, typically it lasts anywhere from 3 to 5 years. And if you think about it, 3 to 5 years can be a long time, and especially if there's no income, that's coming in. And, you have to ask yourself, how am I going to, continue to meet my day-to-day expenses, if I have a disability that's going to last 3 or 5 years? Am I going to potentially liquidate savings? Am I going to have to borrow? Am I going to depend on a spouse or a family member? Or am I going to be forced to tap into a retirement account? And individuals are more likely to become disabled than die during their working years. And an interesting statistic, Charlie, that I found was that, as a young professional in their 20s, you actually have a greater than 50% chance of becoming disabled for more than 90 days. before reaching age 65, and while the likelihood of dying is much less. And if you think about risk management, I think there tends to be, a pretty significant focus on life insurance, which, we would absolutely recommend for, for a lot of folks, depending on your situation. And while life insurance can be a great vehicle, it's really solving for benefits after you as the insured, are deceased, and it provides a benefit to your beneficiaries. But what it doesn't do is provide that benefit to you while you're living. And that's specifically why, disability insurance can be, such a great vehicle for, for these kinds of scenarios. And so, not only does disability insurance help cover, your day-to-day expenses, but, it also can help with your future goals, as it relates to your retirement plan. Having a disability policy can be a great way to safeguard your financial future. As we all look towards financial independence, later on in this presentation, we'll kind of dig through some features and nuances of policies, and how, we can assist, or how they can assist, as we, progress towards, meeting, future goals. And so, I think, lastly, in regards to why is, risk management important, I think, a lot of, when we ask our clients this question, I think the common misconception is that, I'll just rely on Social Security as my backup plan. And although this may be a solution for some, I think there's a few things to keep in mind regarding Social Security disability. One being, it can be difficult to qualify for. There's a lot of restrictions in terms of your ability to earn income while you're on Social Security disability. Another thing is, while I don't think a lot of people realize that it can be a pretty lengthy process from the time you become disabled during your claim to when you actually start receiving benefits. And lastly, that monthly benefit you receive may not meet your required monthly needs. And so, Charlie, I know through the years you've had some personal experiences with friends and family, specifically relating to the importance of having disability. Do you mind elaborating on a few of those?
No, I'd be happy to. And I think this is, insurance in general is never a topic that I think we get excited about. It usually has some challenging scenarios with it. But, early on in my career, I was working with a close friend of mine, who still is a close friend of mine today. And we were going through the planning process, and we came across disability and looked at his employer benefits. He was working for a national builder at the time and had group disability insurance on a short-term basis, but not long-term disability insurance. And he said, I think I'm just going to take my chances. I'm young, I'm healthy. What can, if anything happens, I'll just, rely on Social Security and things like that. And I'm sure I'll get by it. I'll be fine. And unfortunately, he was driving home from work one day, had a really bad headache, ended up pulling over in a Home Depot parking lot and had a stroke. And after several surgeries and years of rehab, he was able to get back to a pretty active level, but not enough to where he could work on a full-time basis. And so here it is, he's worked in his career from his early 20s until his early 30s and established himself and worked himself up to a high six-figure salary, and had to rely on his Social Security benefit, and that's it, which was a couple of $1,000s a month. And listen, he's doing good. He's married. He's got 2 twin girls and living a full life. But a lot of it is dependent upon his wife's income. And oftentimes we'll sit down and we'll talk and we'll say, hey, imagine what an extra $3,000 or $4,000 of tax-free benefit would do for you, your family, your girls, your medical needs, and so on and so forth. And so that's a situation where, I think so often in life when we're young like that, we feel like we're invincible. And really, that's when we really need to be looking at it, because it's affordable, or where it's going to be its most affordable at that time. And so it's something to really consider. And another scenario that is even closer to me is really dealing with my parents. My dad is a dentist, and typically when dentists are in their second or third year of dental school, they're required by the school to apply and obtain disability insurance. Obviously, they're investing a tremendous amount of resources as far as investment into their future careers and positioning themselves for high earning in the future. And so while my dad was in dental school, he just kind of asked himself hey, if I'm in school or I'm currently in school, my wife is the breadwinner taking care of our family. God forbid if something happens to her, what are we going to do? And so he encouraged my mom back in the late 70s to apply for a disability, insurance policy, along with what she had as being a teacher with the state of Pennsylvania at the time. And fast forward, my mom was diagnosed with multiple sclerosis in the mid 80s. I was able to work for several years, but in 2000 had a procedure done that eventually made her bedridden. And so the disability policy kicked in. They were able to benefit from that, or we were able to benefit from that as a family for the next 14 years, and allowed my parents to do several different things. One, provide care for my mom, but allowed my mom and dad to fulfill some of the dreams and aspirations from a financial perspective that they had for me and my sister. So it's something where I've been a benefit in seeing how disability policies can benefit you, and also some of the challenges that could come when they're not in place. And so, I would really encourage everyone to kind of take in as much information as you can from this webinar. It's a really serious and important topic. And by the way, if you have any questions, feel free to kind of click on the Q&A box there on your screen, type them in, and we'll make sure to answer them as we go along. But, Matt, we're speaking about, the disability policies and some of the benefits personally as they have affected me. But do you want to take some time and actually share with us how they actually work?
Absolutely, Charlie. Thanks for sharing. So, I'll start off by saying, disability policies are not one size fits all. All have different features that can be tailored to you and your unique plan. But in general, disability insurance provides a monthly benefit to you as the insured, which, before that monthly benefit starts, there's typically an elimination period. And, this will obviously depend upon the verbiage within your contract, after you go on claim, due to an accident or sickness. But typically these, the elimination period is anywhere from 60 to 90 days. The benefits you may receive, again, on a monthly basis, can be for partial or total disability. We'll get into what the difference between partial and total disability here is in just a minute. And really disability policies provide that benefit throughout your time on claim, or up to normal retirement age or age 65. And most carriers will insure between 60 to 70% of your current earnings as your monthly benefit. And it's generally a pretty good rule of thumb in terms of what type of adequate coverage you should think about, looking to have or add on to if you don't already have an existing policy. And so, moving on in terms of, what is the difference between partial and total disability? Charlie, if you want to hit the next slide. Partial disability is means you're unable to perform every occupational duty, but can perform one or more important duties. And with partial disability, you're actually able to receive 50% of the monthly benefit, and are usually paid throughout a shorter time, whereas total disability means you're unable to perform the substantial or material duties of your regular occupation, in which you would receive the full monthly benefit. I think there's a lot of misconceptions, or when you think of when most people think about what is disability, or I don't need a disability policy, they typically think, oh well, if I need the policy, the only way I'm going to get on claim is if I have paralysis, or something very substantial, and really that's not necessarily always the case. Some of the most common claims from the physical health side revolve around musculoskeletal disorders, things like arthritis and back pain. But it's not just physical. There's mental health disorders as well, things like anxiety and depression. And so, I think those are just kind of some things to think about, depending on your particular situation on how, disability could, just the impact that it can have on your life, and how, policies such as disability can really be a big benefit to you. And so, Charlie, if you want to move on to the next slide, just, in terms of features of policy, I think one of the most important areas to pay attention to in regards to any policy is the verbiage associated with it. And, how you as the insured would qualify to receive the benefits, comes down to really the wording between own occupation and any occupation. Now, I just want to spend some time kind of just discussing the difference between the two. So own occupation is the ability to perform any or all duties of the insured's current role. So if you're unable to perform work in your current role, you would qualify for a monthly benefit. Whereas any occupation is the ability to perform duties of any occupation, any being the key word here, for which the insured is reasonably qualified through education, training, or experience. And Charlie, I know you've had a couple of examples of how important the verbiage between own occupation and any occupation can be in regards to receiving the monthly benefit, for some clients that you've had.
Yeah, listen, it can get tricky. It can get tricky on both sides. And I think, some of the old examples that we used to see specifically around individuals in the medical field would be like a surgeon who has a disability policy and for whatever reasons, maybe they develop a tremor in their hand or they break a finger and can no longer perform their duties or have some bad injuries, arthritis, like you mentioned. And so they go and claim for their own occupation as a surgeon. And then they go take a high paying job at the medical school, the local medical school, and become a professor working a couple of days a week and still are able to obtain, a high wage. But really where it comes down to is scenarios where, we'll stay kind of in the medical field and we'll just take a nurse who's working on a specialty floor. Maybe it's, the ICU and, very demanding job, up on your feet all day, a lot of walking, standing, so on and so forth. And that nurse gets in a car accident. And that car accident leads to some minor injuries, but back pain and a knee pain, but it prevents that particular nurse from being able to stand or perform her normal duties. Now, in this case scenario, let's say the nurse has her regular group disability insurance and she has a long-term policy or long-term disability insurance coverage as well through work. And so it's affordable because a lot of times what we'll see with employer benefits is that they're very inexpensive. The benefits, as far as what they pay, are very reasonable. But the verbiage, like you mentioned, Matt, is very strict. And so in this example, the nurse wasn't able to perform her duties as a highly skilled nurse on the ICU floor, but the insurance carrier denied her claim simply because there was another opportunity for her to work within the hospital in the call center, fielding calls for and providing her nursing skill set to people over the phone, which pays significantly less, let's say a half or a third of what she was able to generate as a wage working on the ICU floor. And so where that becomes really challenging is you're in a situation where you're working full-time in this call center, so you can't go out and get another job to make up that gap that you had between your previous wage to support your lifestyle and where you are now. And, on top of that, you can't get your claim. And so it's really important that people understand the difference between the owner occupation and any occupation and making sure that they're positioning themselves as best they can, that if they have to go and claim, it's something that they understand how it will work and position themselves best to be able to obtain what they're looking for in the very beginning. And, as we continue to kind of have a conversation of benefit and people going on claim, I think one of the biggest topics, not only now in this environment as we approach the election and just having our extended tax deadline back in July, but it's really how are these benefits taxed? And so we've mentioned employer benefits or having, your own individual policy. When your employer pays your disability policy, typically they're able to pay those premiums and write off the premiums paid from their income, basically deduct it, right? And so therefore the government basically says the benefit that the beneficiary receives is going to be taxable. Whereas if you own an individual policy, you're usually paying with after-tax dollars that have been taxed from your earning or wages, and your benefit therefore will be tax-free. And that's really important to understand as you go through the evaluation of what it is that you need. Obviously, if you're making, let's just say $100,000 a year, and at the end of the day, you're walking away with about $7,000 or so after taxes and so on and so forth. Then on one side, you only need to have, I said, if you're making $100,000 a year, maybe you're walking away with $6,500 or so. So on one side, when you're getting the policy yourself, you only need to have $6,500 of benefit. Okay. Whereas if you're getting something through your employer or where it's going to be a taxable benefit, you actually have to get higher coverage to offset those taxes that you're going to need to pay. So that's something to definitely take into consideration when you're going through the process of choosing what policy or looking and evaluating the current policies that you already have. Another thing that we hear so often, and we've talked about it briefly so far, is just Social Security. Obviously, that's something that is there for everybody that pays into the system. And there is a disability benefit that is available through Social Security. It is non-taxable in most cases, but you do have to take into consideration your wages of what you will earn. And it's not only the wages of the person that's on claim, it's whoever, they're filing their joint taxes with. So for instance, if somebody if a spouse is on disability benefit, Social Security disability benefit, and their household income is over $32,000, then their Social Security in 2020, then their Social Security benefit is going to be taxable. And so it's something to really, pay close attention to and work with your tax professional and make sure you understand what your situation will look like in detail if you ever had to go and claim. And Matt, I know we're talking about so many different things, from taxation to benefit, owner-occ, and all these different things. I know you spend a tremendous amount of time working with professionals, particularly in the medical field, and I know that's kind of the topic of today. But do you mind sharing with us a little bit of the different features or riders that you've come across that have been really beneficial or effective for your clients that you work with?
Absolutely. Thanks, Charlie. And so, so riders are an interesting feature of disability policy. So you can make it the Rolls Royce of disability policies, or it can be, fairly basic depending upon, really the costs associated with what, you're willing to pay, on a monthly basis, or could be an annual basis as well. But, what I've done is I've picked the top three that I think are fairly important for young professionals or for folks who, may be looking towards, adding disability to, their list of risk management when it comes to insurance. And so the first one being cost of living adjustment, or the COLA. And what the COLA, or the cost of living, does is it allows, your monthly benefit to keep pace with inflation, right? Because if you think about the dollar today, obviously a dollar today is not going to be the same as the value of a dollar tomorrow. And so what you'll notice with adding the COLA feature, your monthly benefit will actually increase with at a potential, it could be 3%, it could be 5%, just depending on, what the verbiage is within the contract, but it allows that benefit to continue to grow over an annual basis. The next rider is student loans. And as a young professional, I know many folks have student loans, whether these are from college or graduate school. And really, this is a great rider you can add to a policy. It's a reimbursement benefit that's on top of your contractual monthly benefit. So you receive it on top of the benefit that you have within your contract. And it's a great way to help with monthly student loan payments. It can be rather advantageous for folks who have sizable amounts of student loan debt. I mean, just think about if you were totally disabled without a policy and still having to make those student loan payments, right? Depending on your current situation, this can be a great option or feature that you can add to your policy. And then lastly, are retirement contributions. And so, not only does the monthly benefit that you receive, if you need to go on claim, help cover day-to-day expenses, but some policies offer a feature where they'll actually allow you to continue saving for retirement. So, for example, let's say that you're making 401k contributions with your current employer. Let's say you go on disability. Some carriers will actually continue to make contributions for you, to things. If you're making a 401k contribution, if you're a small business and you're making SEP IRA contributions, and it actually also includes your employer match. So this can be a great feature for the continuation of, your financial planning goal of saving for retirement. And so these are really the top three. Obviously, there are more that we can, features that we can add, but I think these, are very pertinent to folks today and can be great addition to, just a standard disability policy. And so, if you kind of move forward and think about next steps, as disability policies and risk management are important to your overall financial plan, At Cornerstone, we spend a great time reviewing our clients' current policies, both individually and through their employers, not only to make sure there's adequate coverage, but to see what potential gaps that need to be solved for. And depending on that gap, we can absolutely help assist in that process. And in addition to individual policies, something we haven't touched on and could probably spend a whole nother webinar on would be discussing risk management for business owners. And I just want to touch on, we have the resources, the expertise, and a great team of advisors that can help business owners with their risk management needs, whether that be through things such as key man policies, overhead expense policies, or even group disability benefits. And so if this is something that pertains to you or something you'd like to learn more about, please reach out to Charlie or myself or your advisor at Cornerstone, and we'd be happy to help. And one thing I would like to hit on as well, Charlie, is just, at Cornerstone, we are an independent registered investment advisor, and that's unique because it allows us to work with many different insurance carriers and offer policies that cater to the needs of our clients. And the great thing about this is it allows us to ensure as a fiduciary that we're finding the best policies for each client's unique situation, whether that's dependent upon their current health conditions, budgetary constraints, or features, such as the riders that we, just discussed. And we can really tailor policies, towards the needs and wants of our clients. And so, as we wrap up, Charlie, just kind of, maybe talk about a couple of next steps that folks can take, in terms of risk management.
Yeah, Matt, and I definitely going to jump on. And one thing that kind of popped in my mind as you're talking about that, it was just, what is the importance of having access to the different insurance companies and carriers? And so, what I wanted to say is not all insurance companies are the same. And we deal with a lot of different clients and specialize in a lot of different areas, from working with professional athletes to yourself in the physician market, high-end business owners. So two things I just wanted to mention really quick. Sometimes you'll see that in employer benefits, you'll see that there's caps on the amount that they can provide. So you might see $6,000, $10,000, or maybe even $15,000 a month. And so thinking about some of those higher earners that are saying, hey, I don't need this policy because I make X, Y, and Z, or so much and so forth. I think that puts you even more risk, right? Because you create a certain lifestyle for yourself. And I just want to say that we have the access to get something that will mirror your income and go out to certain carriers, all the way from high risk stuff with Lloyd's or London down to your basic everyday stuff through a Principal or whomever else, a Standard, and so on and so forth. So keep those things in mind, that it's really important to, there's a tremendous benefit in having kind of the whole gamut at your disposal and finding the right carrier for whatever your current needs are. And that's something that, again, being an independent RIA, we can bring to the table. So as we look at the next steps, I think it's really important, and we would encourage you to reach out to your Cornerstone advisor to engage in a conversation about your current risk management needs. Oftentimes we just kind of breeze through that situation. But again, we're here. Obviously, a large part of what we do is around investment management, but wealth management is a really important part, and risk management as itself is a key part to the foundation of building a good plan. And so in doing that, you can recap the importance of your overall comprehensive plan, see where disability insurance plays a role into that, and then identify action steps that will best help you achieve your overall financial objectives. And so, with that, I wanted to, go ahead and open it up to any questions that anybody may have. And if not, we'll go ahead and wrap it up. And just wanted to say, if you have questions, obviously you can reach out to your advisors directly. Our website is here, cwgadvisors.com, or feel free to call our office number, which is there up on the screen. And we're always happy to help in any way that we can, a conversation, a consultation, whatever it may be, or a deep, detailed analysis. That's what we love to do. So we're here to help you out. I wanted to take a minute and thank our marketing director, Ashley, for putting this together. Matt, appreciate you making some time and gathering all this, this great information for us to share. And just want to say thank you for everybody that joined us today on the call. And if you have any questions, we look forward to talking to you. We'll talk to you soon. Bye.
Thanks, Charlie.